For the longest time, our personal tech has been getting closer and closer to us. It went from our desks to our laps, then into our pockets. But what if the next big leap is the shortest one of all? From our hands, right onto our faces. We're talking about the new age of AI-powered smart eyewear. And folks, it is happening right now.
So the big question is, who's going to win this race? I mean, yeah, you've got the giants like Meta and Amazon throwing their weight around. But there's a smaller, fascinating contender called Innovative Eyewear that's making a really interesting play to bring this tech to everyone, trying to make it stylish, accessible, and actually useful.
And just look at their products, you can see their whole strategy right there. These don't look like some clunky tech gadget you'd be embarrassed to wear. They look like designer glasses. But inside, you get hands-free audio and AI. Now, according to a really deep analysis by HDIN research, this puts them in a super high-stakes position, what they call the darkness before the dawn.
Okay, let's get into it, starting with the bull case. What has some investors and analysts feeling so optimistic? Well, it really all boils down to a pretty clever market strategy that kind of sidesteps some of the biggest problems in this industry.
Their whole approach is what analysts are calling a light asset, heavy marketing model. So, what does that actually mean? Well, instead of spending a fortune building factories, they outsource all of their manufacturing. This frees up a ton of cash and lets them focus on what they're actually good at: cool design, software integration, and maybe most importantly, building a brand people want.
And this is where their strategy gets really, really smart. New tech can feel, well, weird, right? So instead of just trying to sell their own Lucid brand, they've teamed up with names you already know and trust. We're talking Nautica for fashion, Eddie Bauer for that outdoor vibe, and Reebok for sport. It's a brilliant move to get over that tech weirdness hump. It reframes the product not as a strange new gadget, but simply as an upgrade to the glasses you already wear.
So their path to the mainstream really boils down to three crucial steps. First, get the glasses themselves right. Make them stylish, super lightweight, and make sure they work with any prescription. Second, add the magic, that seamless, voice-activated AI powered by ChatGPT that lets you do pretty much everything, hands-free. And third, prove that it works in a market that's absolutely desperate for it. And this number right here, this perfectly illustrates that third step. In 2025, the company sold 12,000 units of their Lucid Armor safety glasses. Think about that. This one product, aimed at the industrial market, made up nearly half of their total sales for the entire year. That is massive proof that there's a real, paying, business-to-business market for this kind of tech.
But here's the thing. A brilliant strategy on paper is one thing, but execution is everything. Can the company actually survive long enough to see its vision through? This is where we get to the other side of the coin, the bear case. And it gets pretty serious, starting with the money. Okay, take a look at this number from their 2025 financials. It's staggering. This is how much they spent on sales and marketing as a percentage of their revenue. Let me say that again. For every single dollar the company brought in, it spent over $1.11 just on marketing. That's not just aggressive, it's deeply, deeply unsustainable. And this table, pulled straight from their official filings, paints a really stark picture. They brought in about $2.6 million in revenue and posted a net loss of almost $7.6 million. This isn't just a company investing for future growth. This is a business that is hemorrhaging cash at an alarming rate. And the worries go way deeper than just the cash burn. HDIN research pointed out several other major red flags. They gave the company a D for its governance quality. They flagged some sketchy-looking transactions with a major shareholder. Their entire supply chain is based in China, which opens them up to huge geopolitical risks and a big 27.5% tariff. And maybe the most urgent red flag of all, analysts figured they only have about 10 months of cash left. That's a very, very short runway. So, how in the world do you weigh all this? On one hand, you've got a genuinely cool product and a smart strategy. But on the other, you've got these huge fundamental risks. So, what's the final verdict from the analysts at HDIN Research? This quote is about as harsh a critique as you'll ever see from an analyst. They're basically arguing that the company is acting less like a business trying to become profitable and more like a financing platform, where the main goal is just to stay listed on the stock market so they can keep raising more money. It's a huge knock against what management's real priorities are. And really, this slide sums up the whole Eyewear act perfectly. The bull case is strong, right? Smart strategy, cool AI integration, proven success in a key market. But the bear case is just as powerful.
a terrifying cash burn, serious questions about how the company is run, and a super fragile supply chain. It's a classic battle between a promising vision and a very precarious reality.
Which leaves us all with this one final crucial question. For anyone invested, for any competitor, for anyone just watching the future of wearable tech, this is what it all boils down to. The idea is powerful, the product is interesting, but the financial foundation is really shaky. Can their innovative tech and clever branding build a real, sustainable business before the money just flat out runs out? That is the multi-million-dollar question.